Hello everyone and welcome back to the weekly Bitcoin update. So building on our previous discussion, today we're going to dive into four key topics: Bitcoin's evolving relationship with global liquidity, an economic outlook for risk assets in general, the impact of negative market sentiment on crypto, and cover the latest news in crypto adoption and crypto related news. So as always, be sure to join our Discord community for daily Bitcoin market updates, as well as weekly economic insights. Let's get started. So let's start by looking at global liquidity compared to Bitcoin. So as I've been saying, global liquidity and Bitcoin have a relationship where Bitcoin follows global liquidity on a 2.5-month lag. This lag is important because Bitcoin is a risk asset. So with increased capital flows, money eventually pours into risk assets. And they're not the first ones, but eventually money does pour into them. That's important to consider because this is a macroeconomic factor. And macroeconomic factors, they help you filter out this short-term noise and chop that's been going on. I would advise you guys to read this article, Bitcoin, a Global Liquidity Barometer, and it was written by Lyn Alden, who is a crypto researcher and dives deep into a lot of investment analysis. And just looking at the executive summary, you can see it says right here, Bitcoin moves in the direction of global liquidity 83% of the time in any given 12-month period. This is higher than any other major asset class, so it is a strong barometer of liquidity conditions. Furthermore, it says that Bitcoin's correlation with global liquidity is high but not immune to short-term deviations caused by idiosyncratic events or internal market dynamics, especially during periods of extreme valuation. This sentence alone captures exactly what we're seeing right now, an overvaluation of the entire crypto market caused by extreme greed. This is why the sentiment has reset so much, because there was so much greed and extreme valuation in the market. Now, this says right here that it is a short-term deviation, and this is something that I've been saying is a short-term deviation that we're seeing right now. The chop, the 2.5-month lag. That's all it is. So with that out of the way, let's shift focus to the global liquidity and Bitcoin chart once again. As you guys can see, global liquidity has continued in its uptrend, which is huge. And what's even better is that it has broken through the previous range high that we made, which is extremely bullish because this now we're seeing a higher high develop, which is a big break from this downward trend that we had. So the ideal scenario has honestly been achieved. Now all we have to do is kind of maintain this uptrend, and the best case scenario here would just be to stay above this range high, use it as support, and push up higher. Now, liquidity is obviously impacted by a lot of different dynamics, but the main one obviously is the money supply out there. So if we see countries continue to print money and continue to add money into this global supply, then obviously global liquidity would follow. So keep an eye on those. Let's turn to the macroeconomic outlook and its implications for risk assets like Bitcoin. Firstly, this recent Reuters report shows that US growth has slowed in January and the unemployment rate sits at 4%. So, as we can see, Reuters says right here, US job growth slowed more than expected in January after robust gains in the prior months, but a 4% unemployment rate probably will give the Federal Reserve cover to hold off cutting interest rates at least until June. So this article suggests that rate cuts may be delayed due to persistent inflation risks and tariff concerns. As it says right here, There are concerns that an immigration crackdown and broad tariffs on imported goods being pursued by President Donald Trump could severely curtail both the labor market and economy in the coming months. So, this is especially important when we scroll down here and look at says right here. Some economists said most of the jobs were being created in low wage sectors. This is huge because, and you know, um, this is not me taking a political stance, but a lot of the uh, illegal immigrants that come to the United States, they cover low wage sector jobs because most of them aren't able to work in a higher wage class just because of the nature of how they got to the United States. So that is something to consider here as President Trump continues his deportation of thousands of illegal immigrants. Going back to just the economics though, we can see right here the James Knightley, chief international economist at ING, says right here, we'd be happier if it was tech, construction, business services, transport and logistics, manufacturing, the traditional growth engines of the US economy that were driving employment growth, but we can't have everything. So this shows right here that employment, although looking strong, is looking strong in the wrong sectors. That is not good. And down here it even says financial markets are expecting a rate cut in June. And if we compare this to the CME FedWatch target rate probabilities for 19th March, which is the next Fed meeting, you can see there's a 97.5% chance of no rate cuts. So this target rate probability metric kind of bolsters the information we got from the Reuters article. And just doing a quick look of the dollar again, you guys can see that we have broken a huge trend. So October 1st, 2024 is when we first got above the 20 EMA. And as you guys can see, recently on the 13th I think, 13th February, we broke this uptrend and confirmed its break, honestly. As you guys can see, we tried pushing above, pushed back down, and now we're confirming that deny. So this is pretty big because a strong dollar is bad for risk assets like Bitcoin and in general the stock market as well. So a falling dollar leads to a rise in risk assets. So this is an important relationship to consider because breaking such a long trend is a huge thing here, and it would be obviously so much better if we could fall into this range that we have been in, or well, we were in since about July of 2023. And just another reminder that the Fed's target rate at 2%, we are still far away from that. We're at 2.8 and we really don't want to climb above 3%. Climbing above 3%, that is a no-go. It's bad. Bad for the markets. Markets tend to care a lot when we are above that. So on the sentiment front, using the CMC Crypto Fear Index, we can see that it currently registers at 38. This signals a pervasive climate of fear. And you guys can see this is over the last 30 days, we've only been going down. Over the last 3 months, we can see that Bitcoin's correlation with traditional markets such as the Nasdaq, S&P 500, and gold, this has begun to shift. And data suggests that Bitcoin is slowly decoupling from direct stock market movements. So we can see here, this is a 3-month chart, and this shows the correlation between the S&P 500, the green line, let's focus on that, and Bitcoin. And as you guys can see, we kind of peaked around 0.8382 and now are going towards 0.43 and lower. So the closer this gets to zero, the more it shows that Bitcoin is moving independently of the stock market, and a negative number, like gold for example was negative here, shows um, opposite correlation. So if gold is rising, Bitcoin is going down. And as you guys can see, Bitcoin's going down, gold is rising. We have that negative correlation. So this is using a 30-day Pearson correlation index. So if you guys don't know what that means, you guys can search it up. But basically, 1 is directly correlated, -1 is opposite correlation, and 0 is they move independently. Now let's kind of compare that to Bitcoin's price action. We can see that fear was at 38 and it was like we're approaching extreme fear, which is huge, even though Bitcoin's price is still above 90K. This is a healthy reset. This shows that short term, this is good for buying opportunities because overall, the long-term factors are still showing that the current price drops in crypto are due to short-term market sentiment shift and not macroeconomic factors. This is a good thing for people like us who are looking for buying opportunities to accumulate before we get that big push to the upside. Just picking off from the analysis perspective, from our last video, like I mentioned, Bitcoin wicked the 100 EMA and has continued to go sideways, and we are likely going to deny this Ichimoku cloud here because we have fallen through, and if you guys watched my last video, that means I am officially short-term bearish on Bitcoin. Now, the two outlooks for me here is that we go up, deny this at about 99 to 100K, and push back down towards the 100 EMA, go down to maybe 93K or 91K, take down all this liquidity down here before we start our push up and go towards the moon. However, there is a possibility where we do something else. If we go down to the 100 EMA, reject the top of the Ichimoku cloud, and then push below this 100 EMA on the retest, this would be extremely bearish in the short term, and we are likely going to see a retest of the 200 EMA, which has been at the 85,000 level. And you guys can check out my levels right here. They're super simple to understand. Bitcoin wants to be ranging above 100K, but is fine as long as it's above 90K. It gets a little bit worrisome around 85,000, but anything below that, I'm going to be completely sure that we're going back to previous all-time highs. And just looking at the Keltner channels, we can see we're still holding this bottom of the Keltner. Very strong support so far because honestly nobody's really trading Bitcoin. Just looking at this price action, you can tell nobody's really trading it. So this is all we're seeing, just a range between the middle and the bottom of the Keltner. This isn't the best range to be having. However, it's not super bearish. We're kind of in this period of uncertainty, and we do need to see either a push up above 98.3 or a push below 95, 93K. Now, moving on in the world of crypto news and adoption, two main themes remain dominant on the narrative. On one hand, we are seeing increased adoption of pro-crypto policies in the United States. This is exemplified by initiatives like the proposed Bitcoin reserve in Michigan. On the other hand, the need for robust regulation is becoming even more critical. And as you guys can see, 16 states are betting on a US Bitcoin reserve. This increased state adoption of Bitcoin is huge considering the overall macroeconomic trends and also the crypto sentiment trends, because a change in state adoption shows that states are becoming more friendly to crypto. The pro crypto administration has its benefits, right? And these are the benefits that we see: more state adoption, more institutional adoption. But first, for all of that, we do need regulatory clarity. We can also see that the SEC is changing its stance on crypto as well. You can see right here, I know this article is from Al Jazeera, but still, In change in crypto enforcement, SEC and Binance seek pause in lawsuit. So the joint motion is a first clear effort to retreat from the U.S. regulators' previous crypto enforcement under Democratic leadership. So this is becoming more and more obvious that the SEC is changing its stance on crypto. But I do want to bring up one thing. Scam incidents like the recent Argentina rug pull and the case involving the Argentine president, I don't know how to pronounce his name, but Milei, this, like, he's facing fraud charges over promoting a cryptocurrency. So this these sorts of promotions are amplifying the common notion that crypto is rife with scams, with manipulation, and is a guaranteed, surefire way to lose your money because you're gambling into all of these scams, right? So such high profile events are increasingly turning retail investors away from this asset class as the negative press casts a long shadow over crypto's credibility. So you guys can see 8 insider wallets cashed out $107 million. And this wiped out a $4 billion market valuation. That's huge. That's $4 billion, guys. That's not petty money anymore. That's billions of dollars. This is, I think this might be the largest crypto rug pull, but things like this is what's pushing that market sentiment down. And things like this is also the reason why we need regulation in crypto so that, you know, presidential figures can't just promote obvious scams to a bunch of people who are blindly going to follow them because, he is a populist leader. But these sorts of things is what's pushing crypto's price down. And this is going back to that point I made earlier, right? We're decoupling from the stock market because of stuff like this, because everybody's looking at crypto and saying, oh, this is a scam. Look at how much money people lost because this president supported some idiotic meme coin. And they don't realize the value that some of these projects actually bring and the value that the blockchain brings to the global financial markets. And not only that, for example, we have decentralized science, and they're doing a lot of innovations in scientific research and promoting scientific research. There's a lot of good projects out there, but they're just being overshadowed by these scam meme coins, and that's what's driving sentiment down. That's what's turning away retail investors. And this is good for people like us who are looking for buying opportunities. But in the short term, this is the reason why we are seeing such horrible price action and such negative sentiment. So many calls for the bull run is over, the top is in. But all of this is just a distraction from the overall macroeconomic and fundamental outlook of the crypto market. Because when institutions get involved, they want a market that's friendly for them to enter in, and that's what they're setting themselves up for. So, in summary, Bitcoin's near-term trajectory will again be shaped by several critical factors: global liquidity trends, macroeconomic policy decisions impacting risk assets, prevailing market sentiment, and the evolving landscape of crypto adoption and regulation. Should global liquidity remain high, monetary policy become more accommodative, and regulatory clarity come out, a bullish phase could emerge. However, persistent negative sentiment and macroeconomic headwinds, such as these tariffs that are going on and all this uncertainty in the market, and adverse news such as high-profile rug pulls, this is going to steer people away from Bitcoin and push Bitcoin towards a bearish correction. And I believe we have one more shakeout left before we go up to the moon. So stay tuned for our next update, where we're going to dive deeper into Bitcoin's price action and take a look at these emerging crypto market catalysts.